Hey, how are you guys doing today? My name is Thomas McCauley. To my left, I have
Carlos Cardoso.
And today we're going to be talking about everything that has to do with credit, what to do, what not to do, what makes up your credit score, how to fix it, or how to build it. So I guess with the way that this is going to begin, talk to me about credit. What makes up credit? What is?
Yeah, so there is 5 components that go into the credit score itself. So the first component is payment history, which is responsible for 35% of your credit score. So that's pretty obvious. Make your payments on time, don't fall behind. You and I both know if you fall behind, your score's going to drop severely.
Yes.
After that, we have 30%, which is going to be amounts owed. So that accounts for utilization on your credit cards. So if you have a card at $1,000 limit, if you are at $300, and that's perfect for 30% utilization, which is what we kind of recommend, 25 to 30% utilization. If you're maxed out on that $1,000 card, then that one account will be 100% utilized.
Correct.
So the more that you are utilized, the lower your score will go, obviously. If you're properly utilized, the better your score will be. After that, we have length of credit history. So that's 15% of your overall credit score. So that is going to be basically all the longevity of your accounts. Obviously don't close any accounts. A lot of people like to close credit cards that they don't use.
Absolutely. Keep them.
Just keep them open, or just keep a small balance on them, even if you don't want to use them a lot.
Once you close that older account, now your average credit life cuts down. So it makes your credit seem younger than it actually is. So you might as well just keep it open, even if you don't use the account.
Next one at 10% is credit mix. So it's really nice to see a good overall mix of different accounts. Credit cards, mortgages, auto loans, student loans. It kind of presents yourself as a good and healthy borrower in the eyes of lenders.
Correct.
As opposed to just one mortgage on your account, which honestly probably wouldn't even happen. One credit card in your account, or just one auto loan. After that is also new credit. So that's coming in at 10% also. Just new accounts, inquiries. The more inquiries that you have, the more weary it makes lenders and banks. I kind of like to think of it as the guy who's on the side of a street asking for money. You know what I mean? You just look kind of shady. You're just looking for new money, new credit. So that's the 5 components that go into the credit score itself and what makes the credit score. Yeah.
Absolutely. And the biggest thing that confuses a lot of people about the credit scores themselves is TransUnion, Equifax, and Experian. They're basically 3 judges determining risk on your profile, which is why the scores typically vary quite a bit. They have different guidelines to determine risk. As well as that, not every single account will appear on each of those bureaus. You could have something that's only reporting to TransUnion, but not reporting to Equifax, so it can make Equifax a little weaker, which in turn will make the score a little less. Now, in that same breath, if that one account on TransUnion goes negative, then your TransUnion score is going to come down heavily, which is going to seem strange, but it does make a lot of sense when you notice that it's only reporting there. When it comes to building credit, I would say there's a couple ways that you could really go about building credit when you first start out. Obviously, we recommend start young. Not everyone has that knowledge or guidance when they're young, so I'd say the best way to do it, which is the way I personally did it, I just got put on as an authorized user on 2 of my mom's cards, waited a little while, then I applied for American Express. They gave me a gold card, a limitless gold card, so that was a perfect way to just step in and start building credit. Because those authorized users, those are 5-6-year-old cards that I got put on as authorized users, so now my credit history went from 0 years to 6 years,
Yeah.
And that automatically makes you look like a better borrower. Another way you could go about it too is secured cards. Those are great. You go to a bank, they'll ask you to put a $1,000 deposit down. You give them the $1,000 and they give you a card with a $1,000 limit that you can constantly revolve. Perfect way to start building credit. Pretty much everyone will accept it. You're not going to get declined for that, which that does carry over into building credit, repairing credit, or building back credit. If something happened, life is what life is. If you're finding yourself having a hard time getting approved for any type of new credit or really any accounts, start with a secured card. They'll notice that when they look at the report, you've had this secure card for a year and nothing bad has happened. Now they're going to be more comfortable lending to you.
Yeah, absolutely. Like you said, it's just a way to just start fresh. If you've had bad experiences with cards, like a lot of people have like a bad connotation when it comes to credit cards. like me myself growing up, I didn't really have much because like my father kind of instilled into my brain that like credit card is bad, debt is bad. You know what I mean? But how are you really going to start? You know, when it's time to look for a house, how are you going to get approved? You know, you have no credit history behind you, no credit mix behind you. You don't have anything to show that you're a healthy borrower.
Yeah. And when credit first really started, well, pre-credit, what they would do is if you were going to apply for something, they would contact people in your life, you know, to see how credible you are. So that's really where credit came about, was to make a predetermined risk factor for you. Like you touched upon with the inquiries, too many inquiries makes it look like you're looking for a lot of new credit. And what these big name lenders or your Chases, Bank of America's, PNCs, M&Ts, what they're looking to do is be your one and only card. Like they're giving you this limit, anticipating that you're not going to be using any other credit. So if they see you applied at US Bank and Bank of America and PNC, they don't know that you're not taking those cards. You know what I mean? So they're worried about getting paid. Yeah. And that's where the risk factor comes in, which is unfortunate. You know, you're shopping around for a car. You want to make sure you get the best deal, the best rate, the best terms. It is quite different when it comes to any form of financing, especially unsecured revolving financing like a credit card. Definitely don't run up your inquiries too much. Keep those tame. When it comes to mortgages and auto, they're lenient with it. They understand how some brokers work. They'll run your credit a lot.
Yeah, especially auto.
Absolutely.
They kind of like group them. Sometimes you could group them. Yeah.
Yeah. So that's the big thing about inquiries. And realistically, just the way that life is going now, at the end of the day, I mean, cash is still cash, but credit has become king. You can get anything you need as long as you have good credit. That's one of the most important factors of life right now. So like I said previously, when it comes to repairing your credit now, if anything bad happens, don't expect it to be overnight. Don't listen to anyone who's going to say they can get it done in 30, 60, 90 days.
It's a long process.
Yeah. It's a long process. You know what I mean? It takes time for these lenders to trust you again, especially if you went through something like a bankruptcy and that involved a big name bank. That makes it a lot rougher. So start small, start with a secured card, work it back up, get an auto loan, you know, get a new car, do what you have to do to make yourself seen or show that you are a legible borrower.
Absolutely. Just start young, build as fast as possible, because you don't want to be 26 with a family now and you can't even get a house.
Yeah.
You know, that's what even if you're not looking to get a house, a lot of folks do what they do nowadays is landlords, they want a credit report.
Yeah.
You know.
And when it comes to our business owners out here too, one of the biggest distinctions and myths that I hear commonly is that your personal credit is not involved in your business at all. That is not true. There's one main factor that business credit is determined from, and that's simply pay history. Borrowing in the business's name. Now, having good business credit is fantastic. It makes them infinitely more happy to lend to you. But at the end of the day, your personal credit is going to be looked at no matter what. Which is a huge thing, too, is getting financing in your business's name, because utilization is such a huge factor on your personal credit report. So if you're leveraging your business using your personal credit report, you're automatically making yourself seem like a higher risk when it comes to getting lending, because your personal side is already maxed out.
Yeah. And it's not like you could explain that.
Yeah.
You know,
it is what it is. So you want to make sure that you divide the personal and the business expenses as much as humanly possible. That's a big thing that'll help out any business owner, especially starting up. If you're starting up, get yourself a business credit. You know, come to us, let us help you, let us figure out what we can do for you, and make sure that you're getting yourself in the best possible position to be able to launch your company, keep your credit intact for life itself, and be able to get the financing you need to operate. That's one of the biggest factors in the startup company is do not leverage your personal credit.
Especially coming to us, like you were saying with the inquiries before, you know, Chase is going to see Bank of America, and then they're also going to see M&T, and they're also going to see this bank and that bank. But, you know, when you come to us, we have insight on where all of our banks pull credit from. So we know how to strategically go about every single pull, every single application, so that if you're Chase Bank, you're going to give me the highest dollar amount possible because you didn't see Bank of America and M&T over here.
Absolutely. Oh, one big thing about credit cards too, paying them down to complete zero is not necessarily going to make your bank like you. I mean, it's going to show that you can afford what it is that you're paying for, but at the end of the day, they want interest. You know what I mean? They want to make money. So if you roll over a balance, unless it's a charge card, don't do that. But if you roll over your balance, they're going to be more happy to lend to you because they're making some money off of you. When it comes to limits and getting limit increases, if you have a $10,000 card and you're only ever using $3,000 on it, they're not likely going to give you a limit increase because there's no reason to. Now, if you have that $10,000 card, you max that thing out and pay it off in 2-3 months. And then in 6 months, you're like, hey, could I get a limit increase? They're going to be infinitely more willing to do that because they see that you're utilizing the whole potential of your card and paying it off flawlessly. It's obvious that there's a higher dollar amount that you really need to do what you need to do. And they'd rather have that for themselves than you divvying it up between a couple different cards. Because that's giving competition money, realistically. They make money off your swipes. They make money off your interest. So as long as you treat your bank well, they're going to treat you well in return. Credit was really very confusing to me when I was thinking in the mind of the consumer. But if you think in the mind of the lender, it starts to make
Makes a lot more sense. Yeah.
It really does.
Like, why would someone want to lend to me?
Yeah. And it's like, you all your limits are good. They're high limits. You have low balances because you're constantly paying your stuff off.
Accounts rates.
Then they're going to look more favorable than if you're 19 years old and just got your first $500 secured card. You know what I mean? There's definitely a lot of difference in there.
Or even like touching back on the limits, like even if you apply, you get an offer for like a low limit, like 1,000, and you don't want it, like still accept it. Because like revolve the money over some time, the banks would see that you're revolving money and they will give you a higher limit. Just call in and be like, hey, can I get a limit increase? Sure.
Yeah, no problem. Yeah, no problem.
Build the relationship.
One big thing too, the difference between credit score and credit strength is huge. Because somebody could be fresh out of high school, like I said, and have one secured card and their credit's a 750. And then you have someone who's got 10 years of pay history, but a little bit of utilization and they're at 710. Just because you have that 750 does not by any means make your credit stronger. This person has 10 years of pay history underneath them. It's like basically they built the house beneath them and they know, the banks look at that, they know it's not going to crumble.
Yeah.
But if you have your one secured card and you're standing on a still, if you get slightly overutilized, it's way more risky to lend to. So if you're a younger person looking to start your business, looking to get business financing, and you're coming into a roadblock where you can't get funding, even though you have the 750, that's really why. That's the cause of that confusion is credit history, credit strength.
Well, I think it was great to touch upon, credit strength as opposed to credit score, because a lot of folks would even say, but I have a 760. None but, like you said, you only have one authorized user account, and your credit's very thin. You don't have a proven track record.
Yes.
As opposed to someone, like you said, just maybe 700, but a lot of utilization. Once you make the proper payments and get to where the utilization needs to be, you're back at a 780.
Yeah, absolutely. So, I guess, quick recap, credit score, very important to have multiple accounts, mixture of accounts, very important to have good pay history. If you're trying to build your credit, get authorized users, wait a little bit and apply, or get a secured card, wait a little bit, show some history, then apply with the same bank that you got the secured card with. It's going to put a foot in the door. It's going to get where you need to be right away. When it comes to fixing credit, if something bad had happened, same thing, get a secured card, get your foot right back in the door, show that you had good pay history. Life is life. Everyone understands how it goes. Not everything can be perfect. Business credit, pay history only, but they are going to be looking at your personal credit. Do not utilize your personal credit for business expenses. It's only going to hurt you. It's never going to help. It could probably help you at some point. So it comes to be, at least, that's the thing too, is if it comes down to it, at least that's there. If you have business cards and you have business financing that you could utilize, if maybe something happens, then you can dip into your personal a little bit.
Yeah.
But if you're using all your personal and then something happens, everything collapses. So that's a big one. And then, the credit strength. It's all about showing in multiple different areas with multiple different high-end banks that you are worthy to be lent to. So without further ado, thank you so much for watching. Any questions any of you guys ever have, feel free to shoot down in the comments, contact us directly. We're more than happy to answer any questions you have. If we're here for you guys, anything you need, let us know.